Yeah, I think we can get started. Other people can jump in and we will have a recording available of this. Welcome to everybody to our webinar on implementing and testing cryptocurrency compliance programs. I'm George. I'm the head of legal and compliance at Blanc. We're a compliance testing automation platform. I'm joined today by Ryan Duvall, who is the Chief Compliance Officer of Fireblocks Trust Company. Ryan, thank you very much for joining us. And actually, I want to start off by acknowledging that just a few days ago, you guys had a pretty exciting announcement. Uh, it was posted on your LinkedIn and lots of other places. And you guys announced your network for payments, which, I think everybody here would love to hear a little bit more about. So if you could start by telling us about that, that would be great.
Sure. Thanks, George. Thanks for having me, and thanks the rest of the Blanc team for putting this together. Yeah, no. So as you noted, we had a really great announcement. It actually coincides with a off-site marketing event that we also put on called Spark. It's actually taking place this week, where many of our customers and external stakeholders are all getting together to talk through all the ways and that Fireblocks powers institutions to build their blockchain business models and help them scale and help secure their assets, most importantly. But to the point you made, George, the launch of our Fireblocks payments network has been something we've been working toward for quite a while. And just for kind of coverage over here at Fireblocks, that the main purpose and the primary commercial purpose of Fireblocks is to provide a proprietary software as a service solution that organizations can license to then power a self-custodial digital asset business model. It's everything from wallet creation to tokenization to payments to connectivity with different exchanges and other vast providers out in the space. Fireblocks technology is itself not a regulated entity, although, as we'll talk about later, I do work with some of the two subsidiaries that are regulated. And this payments offering is actually a non-regulated service. So what the payments model does is it enables organizations to create either accounts with existing VASPs in their jurisdiction, or bring an account that they already have in place, which is usually the case, and then natively connect that into the Fireblocks SaaS console. Using the console, then you can immediately program the conversion between different for on ramps and off ramps for either stable coins or native blockchain assets, and then send the money in and get the crypto back. I don't think it's enough. I think it's kind of normal these days. I think there's quite a few other organizations already doing much of this for the retail side. But one of the things we saw is that institutions really were demanding some similar service, so they didn't necessarily have to go to an exchange to necessarily buy the random asset directly and then have to move it off platform. Instead, they want to be able to do it from, a single hub that can help them manage their treasury assets across multiple domains. So we're really excited about the launch of our payments network. And, really, I think it's we're looking forward to seeing where it goes. I don't know. I'm excited. So, yeah.
Yeah, I mean, it definitely sounds like an awesome thing. And to your point, sort of there's a gap in the market for it, so makes sense to offer it to institutions. You mentioned that basically you are made up of a couple of different entities, one of which is not regulated, the other two which are, and so would love to hear a little bit more about that. Obviously, since we're going to be talking a lot about compliance, would be good to hear about the regulated side of the house as well.
Yeah, yeah, happy to talk about kind of all of it. So yeah, as I mentioned, Fireblocks is I don't know, multiple entities certainly, right? As most organizations are. The primary business is that technology company, and certainly has certainly a different compliance program than most other organizations. And within that enterprise, we also have two subsidiaries that are regulated entities. Well, one is a Fireblocks LLC, which is a money service business in the United States with money transmission licenses in, I think, 36 states and clearances to offer services in another 11. So we're pretty close to the full 50. And then our other regulated entity is Fireblocks Trust Company LLC, which is a limited purpose trust authorized by the New York Department of Financial Services. So similar to, Coinbase Custody or Gemini in that instance. And that organization offers, cold wallet custody for our customers.
Got it. And then, so given your experience, right, and knowing a little bit about your background, you've assessed and tested AML programs for a number of traditional financial institutions, and obviously more recently have entered the crypto space and done the same thing there. So I would just love to hear about your experience of, the key similarities in assessing and testing these programs, and obviously the major differences.
Yeah, that's a great question. So, as you alluded to, George, having spent some time assessing and deploying and enhancing compliance programs across traditional financial services organizations, which is what I did, I guess, for about 6 years when I was at Navigant Consulting. Taking those learnings and kind of applying it to the crypto space has been interesting, right? I think, crypto kind of started in a time when people were kind of trying to figure out, well, how do we do compliance the way that a bank would expect or regulators would expect, and how do we think about managing sort of these operational risks? Because of all of that, I think there's been a lot of reliance on what, traditional finance has done, and I think you'll see quite a few similarities as you kind of look through it, right? So I think there's always those core components of any AML program, the five pillars. But when you want to get, into the nitty-gritty of actual internal controls, it's transaction monitoring, it's sanctions monitoring, it's name screening, KYC, all the goodies that we're looking at. And when you're trying to evaluate, like, oh, how do we test to make sure that they're effective or effectively designed or efficiently operating? We do what you would do in a TradFi. Look to see, are we hitting our SLAs, making sure that there's a quality assurance program over the top to sample test, the operational cadence of the compliance team, making sure that there's really good reporting and MI, and metrics getting shared with the, appropriate stakeholders, making sure that we've got, an independent assessment coming in from qualified persons to help guide us as we continue on. I think you know, a benefit slash challenge is always that most crypto organizations do have multiple regulators these days, especially those that are money service businesses. And so I think that also gives a fair number of voices into the process to help continue to improve it. And certainly when you take on higher, or I guess more thoroughly regulated entities, kind of like a limited purpose trust company, and thoroughness only limited to the fact that, a limited purpose trust company is authorized underneath the banking law in New York. So you get banking regulators coming in anyway. It's inevitably going to start looking like a bank and having that feel and that testing, that monitoring testing approach.
Yeah, that makes sense. I would also imagine that, given that a lot of the regulators are still trying to catch up and understand the crypto space a little bit more, so the
Mhm.
risk profile of the institution is probably looked at much higher, right? So you probably have to be even more buttoned up than like let's say a community bank or something like that.
Oh, yeah. I mean, well, because everybody thinks it's different. And I think, while crypto is itself probably considered a high risk operation just because of the nature of the technology and the nature of the flow, I think to your point, right, it really comes down to the way in which the organization is deploying that technology or deploying that service. We'll see a lot more of this as we get through, banks now being able to offer crypto services innately within their OCC charters. Um, but I think you're right that, like, it's always an education battle trying to bring regulators to where you are and understanding how the process works, how the products and services work, and how crypto has re-envisioned probably the same thing in just a different way. I was actually having a conversation pretty recently with a regulator about, what the differences between using, a core banking software for managing account balances versus using a blockchain. It's more or less the same thing. It's just a matter of how do you reconcile against, the segregated wallets for every customer versus, the account numbers on an internal ledger for a core banking system. So it's sort of, just trying to reapply that thinking and being a little bit more flexible in understanding what you're seeing.
Yeah, no, that makes a lot of sense. Um, Sort of jumping off your start in the industry, and you did touch on it a little bit there, but would love to hear a little bit more about how you've seen from the time that you've left Navigant and went into the crypto space, to now, have you seen the changes in the industry, especially when it comes to like what is being expected from a regulatory standpoint? I imagine as it gets a little bit more mature, the expectation for programs has definitely grown.
I think so. I think since the beginning, and I started working in crypto in 2018, give or take. Since then, it's been pretty exciting to see how regulators and banks are approaching crypto organizations. I think it's things have changed a great deal because now there's so much more tooling out there. From everything from blockchain analytics to help identify uh, source of funds risks and counterparty risks, all the way through to the explosion of reg tech space, right, where you can now do customer not present onboarding in a more efficient and thorough manner, right? With like ways to detect, like, is this a deep fake person talking to you right now? It can be pretty. I think with kind of like this, just again, explosion of technology and explosion of ways to start thinking about how to do these services, we've seen across the board just a general improvement in how banks and fintechs and crypto organizations and non-banking financial institutions all uh, get into a place where they can offer these services. Um, to your point, like what the expectations are in terms of how they've grown, I think they've grown quite a bit. I think there's a better understanding of like, well, what is the CDD risk now at an MSB? It's a really good place to start, but the law on money services businesses, and as far as the BSA goes, doesn't actually cover institutions. It doesn't actually require CDD for those, or like the CDD rule doesn't apply to those organizations. But yet it is a requirement, right? And it is clearly a requirement, and it's something that everybody knows within the organization, within the institutions that you have to build to that, because it's a standard that everybody looks to. And I think, more and more as crypto gets more complicated with the use of staking and DeFi and the lending protocols, and you can keep going, there's a better understanding that, hey, listen, TradFi had some things that they did right in terms of understanding like model risk validation, model risk management, model risk validation. How do we go through and identify our operations? And I think a lot of that's going to start transitioning into how crypto organizations should start kind of evaluating their operations, their compliance.
Yeah, and I also love what you mentioned there about how fast the technology is moving, and on, let's say, like the fraudster and money laundering side, um, we can't be reactive, right? With our programs, we really need to be proactive and know what kind of technology is coming out almost as quickly as the people who are going to be trying to use it for more nefarious purposes. So
Yeah,
yeah.
exactly, exactly. Trying to stay ahead of the fraud vectors is a constant game of whack-a-mole. But it's a worthy cause, and especially for a retail organization, which Fireblocks is not, thankfully. But for retail organizations, it is a challenge. It is just a constant battle with fraud.
Yeah, absolutely. Speaking of, looking forward in time a little bit, with the adoption of the Genius Act recently and the increased use of stablecoins, um, how do you foresee that affecting the AML landscape in crypto and even more generally?
Yeah, I mean, I think what the Genius Act kind of put out there, and I think what the Clarity Act is also putting out there, even though it's not passed, is just the general expectation that organizations comply with AML laws, which we already kind of knew, and ensuring that um, you know the industry builds its services responsibly. I do think that there's certainly differences between crypto and some of the legacy financial services and financial products out there. But I think the core tenets everybody can agree on that you kind of have to make sure that the money you're getting isn't facilitating money laundering or not facilitating the obfuscation of illicit proceeds. I think everyone can also agree that, hey, listen, you need to keep records of who you're dealing with, especially in a regulated space. I think the new laws are really just kind of putting into place that those expectations that most I don't know most people in the industry, I would say, already knew and are doing to date.
Yeah, that's I think those are all great points. Next question. So, again, obviously you've worked at a number of institutions, and you usually have, let's say, annual independent audits. You might have quarterly assessments if you have a partner bank, or perhaps even, with your MSBs in so many different states. You kind of have to stay ahead of your program and make sure that the deficiencies are being caught by you as opposed to one of these regulators.
Mhm.
Do you think that fintechs, and whether crypto or otherwise, would benefit from getting real-time feedback about their programs, and basically where the deficiencies are uh, on a daily basis, as opposed to waiting to 3, 6, or even one full year before finding out that there's a problem?
Yeah, no, I absolutely agree. I think anytime you can incorporate real-time feedback or near-ish real-time feedback into the health of a program, it certainly makes the program stronger, right? And I know most compliance officers would agree that anytime I can get a machine to do it, I would prefer to do that too, because one, the machine doesn't sleep. It'll keep giving me information. It'll keep giving me more data. And two, it's scalable, right? More infinitely scalable than, the human beings 8 hours a day. So I think, that is absolutely where the space is going. And I also think like with the rush to adopt AI, I think it's the same sort of thing. Everybody's looking for that edge to um, help improve and scale and evolve their programs. Um, but I think again, at the end of the day, it's making sure that there's good reporting and good health checks and it's the old adage, measure what matters. And whatever you're measuring is the thing that's going to drive your choices going forward. So making sure you know what you're measuring and know that those measurements are actually going to lead to improvements in your program and aren't just for, theater purposes.
Yeah, that's a great way of putting it. And I love what you said about scalability and automation as opposed to adding bodies. I think many of us have run into the resourcing pushback, especially like in a standard fintech. It's how many people do you want to hire? Oh, yeah, we're not hiring anybody. So you figure out another way to do this with what you have. So I think we've all dealt with the resourcing constraints in our
Oh yeah,
careers.
yeah, yeah, absolutely. But I think that it's a fair argument, right? It's a fair conversation. At least it's a fairer conversation now because of the way the technology's exploded. At least now there's more tools in the toolbox that you can leverage in order to help defray some of those concerns and costs. Whereas like in the old days when it was like, hey, listen, I've got more cases than I can adjudicate with my team within the SLA that I've set. Like, okay, like you need more people. Like, there's no other way to solve that back in, the 90s and early, well, post 2020, post 2001, I have to say, right? So in the first 15 years of the 2000s, you just always had to hire new people. And that's always a bit of a challenge. But nowadays you can think about it in different ways. Like, well, how do I redeploy my resources and get, a machine to do some of the work on like first level reviews versus, spending, the time on, adjudicating, is George R the same George R on this watch list? Like, probably not, right? So I think that there's always a lot of really great places to pick and choose the battles now.
Yeah, and I appreciate you clearing me of not being on the OFAC list.
I didn't say which list, George. You inferred. I just,
That's a great point, actually. We have a few minutes left, so I would love to open it up to any questions that our attendees may have. So if anyone has any questions, please feel free to ask away. No questions, it seems. Oh wait,
Yep.
there we
No,
go.
there's one here. How do you prioritize which elements of your BSA AML program to focus on for QA, especially with limited resources? So it's a great question, Vivian. So as far as prioritizing QA, what I try to do is I try to keep the QA program sort of right sized to this organizational operational cadence, right? So for certain organizations, depending on where the most operational lift is happening, I skew the QA program to monitor the highest risk areas. So, for example, say I'll keep using the watch list example since it was a good one for me. Say I have an organization that's processing lots of transactions, but it's all transactions I would expect. Like I don't expect a lot of like deviations in, but I get a lot of watch list hits because of tuning issues or data issues or something. I would probably I would probably put my QA program more closely aligned on evaluating closed alerts on the watch list disposition side rather than like worrying about making sure that I have, a thorough, like a full review of every case that was coming through every case that was dispositioned, right? So a little smaller sample on the cases because I'm just having fewer of them, but a little bit tighter and more appropriate review of risk-based approach against what was happening in terms of the transaction screening process. So maybe that would help. Maybe that helps. Maybe it doesn't. But I think it's kind of one of those things where it's evaluating where the risks are in the program itself, and then deploying your QA program appropriately. How is AI impacting and changing your workforce? Um, AI is, a constant benefit for us, I think. It impacting and changing, I think it comes down to knowing what you can and what you can't get out of AI. I think every organization is sort of on that journey these days to understand how AI works and how it can best be deployed inside of a business. I think in a compliance program, AI can be really helpful in terms of evaluating policies, procedures, and design of a program against guidance because it's all public. The other day I took a AML policy and put it against the FFIEC guidelines and just said, tell me where this policy is weak against the FFIEC guidelines. And that would have taken, maybe one or two people at a consulting firm a month to do. Kidding. But, now it takes 5 minutes. So something like that can at least be insightful, and I think that that's always a really helpful place to begin. I think as you get farther up the chain and using more and more of the AI functionality for adjudication dispositions, that's always a benefit too. Um, any other questions?
It doesn't look like it, but we'll leave it open. But for the time being, just to add to that point, I think I like what you said there about AI is like mostly helpful, and I think all of us are still wrapping our brains around where it's most useful. I can't go to a single legal networking event without everybody talking about AI and what does this mean, and especially in the field of law, I think there's a lot where there's still a lot of uncertainty, and I think we're going to start moving to a point where more and more entities are going to start having to have their own internal AI policies of, what are you allowed to do, like testing against, biases that the machine may have, and how do you kind of account for those biases. So I think there's going to be a very interesting time in the compliance space, generally speaking, where AI program assessment is probably going to be like one of the things that we might be talking about like a year from now, and on a webinar similar to this.
Absolutely. I think AI program assessment is probably closer than we think. I think there's AI, I think there's going to be AI model risk assessment sooner or later, which I think will drastically reduce sort of the obligations and burdens on organizations to help understand like, is my model working the way it needs to work, and is it tuned appropriately, right? Like if I put that through an AI model that is verified as actually operating appropriately, and we can talk more about that if helpful. But I think that's a huge unlock for like a financial services space that historically has had challenges understanding like how do I do model risk management? You have to hire specific people to do that. It's very what's it called, limiting to an extent in terms of how fast you can grow if you constantly have to like check things over and over again with an independent third party. But you know, we'll get there.
Yeah, absolutely. I think the biggest advantage there is we in the compliance space at least know that it's going to keep us all employed, right?
Yeah, yeah, absolutely, absolutely. Because again, at the end of the day, somebody needs to be able to interpret what the machine told you. So I think that that's always the best part about, legal and compliance and where the space is going. AI is certainly helping with the first task, but it's rarely being able to. It's very rarely able to give you the entire complete picture at the end of the day.
Yeah, I think that's a great way of putting it. I don't think we have any more questions, and we are getting close to time. So, if you want to give any final thoughts, feel free.
No, this has been a really great conversation. Really appreciate George the invitation to chat today, and best of luck to all those here, and hopefully catch you guys all soon.
Yeah, Ryan, thank you once again for taking the time. I think this has been very informative, and I think everybody benefited from hearing your thoughts on these topics. And thank you to everybody for attending. Stay tuned. We'll probably be doing these fairly regularly.
Great. Bye, everybody. Bye,
Take
George.
care.